and welcome back to the channel. Today I want to talk with you about a very well-known investment concept known as value investing. And it's an approach to investing, an investment philosophy that was originally articulated by Benjamin Graham and explained really well in this book, The Intelligent Investor. And I'll go ahead and put a link to this at the bottom of the page. This most recent revised edition includes commentary by the Wall Street Journal reporter Jason Zweig, and it's updated and really helpful and very interesting. But the reason I wanted to bring it up and talk about it is because value investing as articulated in that book and value investing as it's described and practiced today, for the most part, have almost nothing in common. A lot of investment commentators are saying that value investing as an approach no longer works. And it's really interesting because the reality is most investors are practicing a version of value investing that is a very, very superficial take on what's described. They're going out and they're saying, okay, I'll just buy stocks that are trading at low PE ratios, low price to cash flow, low price to book, looking at these metrics and looking for low multiples of them and saying, okay, that is a value stock portfolio. But there's no reason for anyone to expect that just blindly buying companies or stocks of companies where they're trading at a low PE ratio or a low price to cash flow or price to book multiple should work. There's no reason that should work because the market may not be efficient all the time, but it's efficient most of the time. And so the reality is, if a company is trading at low multiples, it's probably because it deserves to, because there's some issue with the business which makes it less valuable relative to the other companies out there. And you're never going to be able to identify whether that discount is actually warranted or not until you actually dig into the financials and understand what's driving the financial and economic performance of the business. That's how you identify the intrinsic value and how you're in a position to be able to compare the price on one hand, the intrinsic value on the other, and to determine whether you have that discount, that margin of safety that is the bedrock of any good investment in terms of your upside versus your downside, your margin of safety. When you think about it, value investing is really just about truly knowing and understanding what you own and buying at a discount to that intrinsic value that gives you a margin of safety. It's about buying a dollar for a dime. And when you think about it, how could that ever go out of style? How could that in and of itself ever stop working? Doesn't really make sense, does it? Ultimately, value investing it comes down to really two things. It's about an intellectual framework, a way of thinking and seeing when it comes to investing. And it's about really emotional detachment, having the patience and the discipline to follow through on that framework, that lens through which you are seeing these businesses and assets. I appreciate you stopping by and checking in on the channel. And as always, stay safe and remember, it's not the return on your money, but the return of it that's most important. Take care.